This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Nigel.
Morning.
3 days now that the market has been under a little bit of pressure, although very, very range bound. But let's see, today all the big earnings kick off with HCL Tech, then Reliance, then ICICI Bank. So lots to talk about.
Lots to talk about, but not very much from global markets once again, right? So it's very, very quiet out there. Is it, the quiet before the storm? Some believe it perhaps could be. Others believe that there's not very much by way of triggers, and that also would be true. So the overall tone in terms of global markets remains one of rate expectations, which are rising a little bit, and corporate earnings, etc., out of the US, which are also a little mixed. So neither here nor there. Equities overnight were absolutely lackluster. So the S&P was flat, the Nasdaq on your screen absolutely flat. You got US government bond yields, actually not just US, but in Europe as well. Some of the bigger markets like Germany, etc., are seeing the sovereign bond yields rising a few basis points every day. So the 10-year, for example, last night in the US was up, the yield was up 2 basis points. It's back to about 3.59. I think the 2-year from the lows of last week is up almost 55 basis points. So that is, quite a rise, and it kind of reflects this swing between pricing out rate cuts and then quickly pricing in rate cuts. By the way, for the next FOMC meeting, markets are now, I think, fully expecting a 25 basis point cut. They price these cuts out, next to nothing, but those are back on the table once again. Let's come to the market here. So the bulls yesterday on the Nifty managed to defend 17,574. Which is the level we put out in trade yesterday. So broadly, the range for the Nifty still is, Monday's high and low. Yesterday we talked about how it was an inside bar. Tuesday the market traded, within the range of the previous day, which was Monday, and that range still holds, which is 17,574 on the lower side and 17,863 on the upside. Simply put, unless this range is kind of taken out on the upside or the downside, you could expect a little bit of a sideways price action like what we've seen over the last 2 sessions or so. Bank Nifty has been the stronger of the two lot. We were talking about how even on days when the Nifty has been down, the Bank Nifty has been refusing to post a negative daily close. It happened yesterday. A close on the Bank Nifty below 41,886 will confirm that the sort of uptrend that we've been seeing, the very strong rally that we've been seeing, is perhaps maturing. It's close to an end or perhaps an end. So we'll see. We need a firm close below that 41,886 kind of level. And the recent high on the Bank Nifty, which was 42,603, will be the important level to watch if the market were to turn around and aim for higher levels, all-time high levels, etc. So it's 42,603 is that level which the market will find and perhaps will find some resistance at. So 2 or 3 days of flattish sideways kind of market, not a market we're used to, but perhaps a few more of those wouldn't be exactly all too bad. Sonia.
Oh, absolutely. Range bound, right? That's the way the market has been for the last many days. So it's tough to believe whether the market would move out of this range in the near term, although within that range, there's a lot of news flow that we're looking at. Now, for the US markets, there were minor losses that we saw overnight, and that's also because of the earnings. Tesla's earnings were a case in point. So the numbers were below street expectations. There are huge discounts and price cuts that Tesla has taken across its range of vehicles in order to beat competition or to, wade off competition. And that has really put pressure on their margins. So that's something that the street did not like. Apart from that, of course, our own markets have been falling for 3 straight days now. It's a trading range between 17,400 and 17,800. And if you look at the flows as well, right, FIIs have been selling for a couple of days now. Yesterday as well, both FIIs and DIs sold in the cash market. It's been the 3rd day that FIIs have been selling and DIs as well sold a bit. So I think the conviction is now a little bit on the lower side, waiting for some major positive trigger. In terms of local cues, I'm tracking 2 things. One is HCL Tech will be reporting earnings later in the evening, so we'll react to it tomorrow. But the numbers are expected to be weak yet again. There's hardly any, in fact, the constant currency revenues are expected to decline this time around. EBIT margins will decline as well. So there could be some caution on that one. And of course, we await management commentary too. But the other stock I'm tracking is Tata Motors. It's because it's been the biggest Nifty gainer this year. It's up 20% already. And yesterday, they reiterated their plans in the electric vehicle space. There's a £15 billion investment that Tata Motors will make. And autos have come back, in some form this month and this year. So I'm tracking that space very closely. But Nigel, what are you looking at? Largely, it's been range-bound. Do you reckon there could be any trigger that could take it out of the range?
Well, today is weekly expiry as well. But just to give you one data point about how boring it was yesterday or the last couple of days, is that the Nifty futures volumes was the lowest that we saw in more than a year. So, that's telling you how it's not only in 2023, it's the lowest in more than 12 months in terms of the Nifty futures volume data. So that's telling you we're bracing ourselves for a bit of a range. And the range comes up for you in the screen. It appears we're in consolidation mode, 17,500 around 17,800 odd. The FIs, they added some shorts, but not to worry because they wrote some puts as well. The broader market outperformance, though, that seems to be slowing down a little bit because the last few days we're getting used to the mid-cap index, the small-cap index ending in the green, even though the Nifty was not doing much. Yesterday, though, they gave up a little bit. So both the mid-cap as well as the small-cap indices, they came off from the top and they ended in the red. Let's see whether or not they're pausing for breath and that buying that we saw from the broader markets resumes. So that'll be the key monitorable. Now, from the F&O market, well, yesterday in a live market, you have the premium on the Nifty futures that you track. That's come down from around 60, 70 points odd to around 50 points. And yesterday it went to around 30 points odd. Give you a sense that maybe there is some shorting. And from the FIs table, yes, there was some shorts. So they added close to around 3.4 thousand short contracts. Not too much. And the short positioning is added on 64%, which is very bearable. Remember, when they go to the extreme, that's where you see a big short covering bounce that plays out. On the option side, well, they bought more calls than puts in trade yesterday. The positive, though, is that they're writing more puts than calls. So maybe at lower levels, you see some support that comes in. Let's run you through a couple of strikes that were very, very active in trade yesterday. 17,650 call. Just take a look at that. Premiums close around 28 rupees. At the start of the day, it was around 50 rupees. So you add 50 to around 17,650, you get around 17,700. Even if you're looking at the 17,600 call, the premium out there is around 53 rupees. But at the start of the day, it was around 100 rupees. So you add that as well. So that's giving you the resistance level. Both those two strikes were getting written. So 17,700 becomes a bit of a resistance on the upside. On the downside, though, 17,600 put was seeing a fair bit of open interest build up. And the premium over there was around 30 rupees. Now, the last few days, if you go to around 17,570, 17,580, you've seen a bit of a bounce from there. And that's the lows that we saw this week. Resistance, as I mentioned, 17,700. And on the Nifty Bank, it's having some trouble at around 42,500. I don't know what's going to help it get past that. That's the high earlier this week as well that we saw. And the 100 EMA becomes crucial to hold on the downside. If that 100 EMA holds out, then you're bracing yourselves for more. SGX Nifty is suggesting a gap up. I think that gets sold into at some point of time. So don't chase the open, but maybe if you get it on an intraday dip, maybe risk reward could favor you. Weekly expiry, so things get volatile in the second half of trade, guys.
Okay, well, as I was saying, boring sideways markets are tougher than down markets to handle for traders, right? Because nothing happens. I mean, you're in a very, very tight range, small range, not even a wider range, which you can trade on extremes. Yeah. So I hope we don't get into one of those phases.
At times it's an option writer's delight, right? Because if you're going to stick to that range, till that range breaks. So on both sides, you write and you eat the premium, and hopefully it doesn't break out. Once it does, then you're in trouble.
Well, for SIP investors, it's been a different story altogether, right? I mean, the last 1 to 2 years has been very, very tough. And it's just good to see that the market is not falling like it did in the early part of this year.
It's been tough, Sonia, but you need to keep it going, right? Yeah. I mean, personally, I'm saying that I haven't stopped in the last many years. So just keep the SIPs going.
SIP flows are at all-time highs.
Yes.
So
contributing.
That's been, absolutely. So, that's been rock solid. Actually, that is the one which is driving equity flows into mutual funds because discretionary has dropped off. It's negative if you sort of adjust for the SIP number. So that's good to see. Well, before we go any further, let's quickly tell you what is lined up, in the first half hour of the show. We get you updates from around the globe. Gary Schlossberg, the Wells Fargo Investment Institute, will join in with a quick trade setup. We'll get you our team's list of top stocks to watch for the day. At 8:30, we'll have Deepan Mehta of Elixir Equities with a quick check of what he's watching out for in the markets.
Okay, let's begin the show now with a view coming in from Mahesh Nandurkar of Jefferies. He says the Jefferies economic indicator for March 2023 saw growth reduced to the slowest in more than a year. He says a few broad indicators such as diesel and electricity were much below the average levels. Urban data showed good auto sales, but higher frequency urban consumption slackened. He adds rural indicators held up better, and good inflation and supportive forex trends provide some policy headroom. He also says, supported by capex trends, they are overweight on domestic plays.
Okay, well, let's get you some money market views as well. On the rupee, Parul Mittal Sinha of Standard Chartered says the rupee traded in a narrow range last week as impact of dollar weakness was offset by dollar purchases by PSU banks. Parul expects the dollar INR to trade in 81.8 to 82.4 to a dollar range next week amid rise in short positioning on improved external sector dynamics. She adds dollar and oil price trends will be the key driver for the forex markets.
All right, and on the bonds, Parul Mittal Sinha of Standard Chartered says domestic yields traded in a range last week despite a spike in global rates on hawkish Fed speak. Positive data driving expectations of a 25 basis points rate hike by the Fed in May and deferring of rate cuts. Parul sees the Indian 10-year benchmark yield to trade in a range of 7.15 to 7.35%. She adds, apart from global rates, the focus is on the April MPC minutes to assess the policy rate expectations.
Well, we have a lot of stock-specific action, which we're tracking for you. We get to that in just a bit, but for the timing, let's run you through the list. We are tracking a whole host of stocks. Tata Motors tops the list, Mastech, Equitas Small Finance Bank, Bank of Maharashtra, NBCC, Ultratech Cement, Amy Organics. Their stocks on the back of positive news flow. While on the flip side, we're looking at Tata Communications, ICICI Securities, and HOEC. Their stocks that could be in the red.
Okay, well, shifting focus back to the global markets, the Fed Reserve has released its first beige book after the banking crisis. CNBC's Steve Leesman has all the details for us.
Beige book saying that economic activity was little changed in the period, the 6 weeks ending in April here. First part of April, 9 districts said there was no change or a slight change. 2 said they saw the outlook deteriorate. That's of the 12 Federal Reserve banking districts. Consumer spending overall was, hold on 1 second here. Consumer spending was generally flat to down. Price growth was seen as moderate. Auto sales were steady. Manufacturing activity was flat or down. Travel activity picked up. Now, there's some important information here. We've had a chance to look at it briefly. I think the Fed's going to get a lot of sense of what's going on in the banking business from this beige book. Lending volumes were down and loan demand declined. That was along with what was said in the prior beige book. Banks tightened lending standards amid uncertainty and liquidity concerns. First time we've had that liquidity concerns in the beige book in a while, certainly. Employment growth moderated somewhat. The labor market was becoming less tight, and price levels rose only moderately, and the rate of price increases appeared to be slowing. There was some modest to sharp declines in non-labor input prices and significantly lower freight costs. Guys, that's what I've been able to get so far. What I'll do later is dig down into each bank has a banking and finance section in their report of the 12 banks. So, but right now we're hearing some liquidity concerns and uncertainty. And of course, you guys understand the importance of what's happening in the banking business to the outlook for the economy and of course to the Fed.
All right, that's the Fed's beige book. Gary Schlossberg is joining us, global strategist at Wells Fargo Investment Institute. Gary, good to have you with us here back on the program. Thank you very much. You know, markets everywhere have gone very, very quiet. Actually, I was looking at the CBOE Wix, which has fallen almost 13.5% in the last 5 sessions. It's at a new 52-week low. So it's kind of telling us that a period of calm lies in front of us. There are other ways to interpret this as well, as a contrarian signal, etc. But how are you looking at things from a market macro standpoint?
Well, I think from a fundamental standpoint, there may be some uneasiness beneath the surface. It's clear that the Federal Reserve will be raising interest rates at least one more time on May 3rd. Out beyond that, it will be data dependent. But what we're seeing from the data is still mixed, and that's pretty typical at the peak of an economic cycle. Pretty mixed, but beginning to tilt more toward weakness. As you just heard, the Beige Book survey showed the economy pretty much moving sideways. We know that manufacturing is in a recession already. Housing beginning to roll over in response to the latest backup in mortgage rates. We're seeing that in weekly data that we monitor. Services are holding up well, employment holding up well, but even there are signs of softening around the edges. And of course, all this against the backdrop of tightening credit The positive spin there is that perhaps it's doing some of the Fed's work for it. As credit tightens, that creates a headwind. But for now, at least, a very difficult combination for the stock market, even as it moves sideways.
So what do you see as the way forward, Gary, as we head into what could be a global recession, a recession in the U.S. markets as well? Do you think that the equity markets could take a back seat, other asset classes could move center stage? And what is the asset, what is the asset allocation strategy for the rest of 2023?
Well, I think for a time at least, it's going to be defensive. We continue to focus on the high quality, highly liquid stocks in the U.S. market. By sector, we continue to focus on the more defensive sectors, healthcare, energy to some extent because of the positive fundamentals there. We are preparing for a move into more economically oriented stocks, but we think it's really too early to make that move. For now, at least, as we enter a recession, the play in the stock market is to focus on these defensive sectors. In the bond market, very short-term securities benefiting from those increases in short-term rates. We think we're close to a peak in long-term rates, so we would barbell our portfolios, but stay away from the intermediate sector.
Hi, Gary. Good morning. Gary, we started off 2023. That's the Indian markets underperforming what the globe was doing. But I think when you joined us last as well, you spoke about towards the end of this year, India can start outperforming, even the US markets probably. Do you hold on to that? And what's your view on the Indian markets from here on?
Well, I think the Indian markets have the benefit of inflation, the Reserve Bank moving to the sidelines, at least temporarily. And if inflation can stay within their target band, that really works in favor of India at a time when interest rates continue to move up, certainly in the developed country space. We think the domestic economy, as inflation has moved down a bit, will benefit from that, has been benefiting from it. We see India as a growth leader in the global economy. We think between India and China, we will see a cushioning effect from that global slowdown that continues to be focused or led by developed countries. And along with that, we think that the Indian market, the Nifty and other stocks in India are pretty well positioned for that kind of environment. And then, of course, as global interest rates come off, which we think may happen by early next year, certainly in the U.S. and perhaps some other areas, that should provide additional support to the Indian market.
All right, Gary, we'll leave it there for now. Thank you very much for your time. It's always a pleasure speaking with you here on CNBC-TV18. Have you back soon again. Well, we'll take a quick break here. We are going to be coming back with our top list of stocks that our team is watching out for on the other side. Stay with us.
Welcome back. Hope you're having a good morning. Well, we're likely to see a green start to trade. Last 3 days, we've been ending in the red. So let's hope that today we see some bit of green, at least for starters, will be in the green. But plenty of stocks that we're tracking, and our research team is standing by with CNBC-TV18's top stocks for the day. Sonia, you go first. Tata Motors, JLR is going to be putting more money in that EV vertical. Give us more details.
Oh, absolutely. So Tata Motors is clearly doubling down on its electric vehicle foray. They came out with a release last evening to the exchanges that they will be pumping in £15 billion through the JLR vertical over the next 5 years as their entire EV strategy accelerates. Now, what they're looking to do is to launch 3 electric vehicles, from the JLR camp over the next 2 years. This will include an electric Range Rover later in this year. There's a mid-sized all-electric SUV that's planned in 2025 as well. And not just that, I think what the street would like is a reiteration of a couple of its financial targets as well. Now, they have guided for a double-digit EBIT margin by FY26. This is largely in line with their earlier guidance, and they plan to achieve this through aggressive cost-cutting as well as an improving product mix. The only change in guidance is on their net cash positive balance. Earlier, they had said that they'll achieve it by FY24. Now, they've pushed it 1 year out because, of obvious reasons, they have a £15 billion investment program. A lot of brokerages are positive on the stock. Macquarie remains constructive, while Morgan Stanley maintains overweight. They have a target price of 513. But let's move on. Tata Communications is also in focus this morning. Rima has more on that. Rima.
Thanks so much for that. So for Tata Communications, there is a margin miss. Margins have declined by 120 basis points versus expectations of an 80 basis points decline. And the key reason for the margin miss is the company has ramped up its employee headcount, employee base in anticipation of a pickup in growth. So EBITDA margins this time at 22.6%, lower by 120 basis points and below the company's guidance of 23 to 25%. The data business has been fairly healthy in terms of top line. The other key numbers, revenue growth of 0.9% quarter on quarter, but because of the margin miss and the decline, profits are down nearly 17%. The company has also gone on to say that as of now, they've not seen any significant weakness in the deal funnel, that's the deal pipeline, despite the macro headwinds. Another important alert is the company has said that they have their subsidiary has an outstanding receivable of more than 170 crore towards a troubled telecom player. They are in discussions with that telecom player. They believe this receivable is good and recoverable in due time. But just want to update that there is an outstanding receivable and that stressed telecom company should be read as Vodafone Idea. Back to you.
All right, Rima, thanks very much for that. By the way, you'll hear from the Tata Communications management a little later on the program here, and we'll kind of get you snippets of that. Our network will be speaking with, we'll have the Tata Communications management. But Rima, back to you on Mastek.
Well, actually a pretty good set of numbers from Mastek. So after the big miss that we had from Infi and TCS, Mastek's numbers are looking good. A dollar revenue growth of 7.7%. Margins have expanded by 50 basis points. Profits are up 13%. And these are all on a quarter-on-quarter basis. Their constant currency revenue growth has been more than 5%. And it's driven by the UK government business. So Mastek has reported a good numbers. Even the other metrics, like the order book has picked up on a sequential basis. Attrition has come down, like we've seen in the case of the other IT companies. So on the whole, Mastek's numbers are actually looking pretty good, and there's very little to complain about. So these numbers would be liked by the street. Considering the overall mood towards IT has been bad, Mastek stands out.
Okay, so we'll keep an eye out on that. Thanks a lot, Rima. Surbhi is joining in. She has ICICI Securities on her radar. Surbhi, how did it look this time?
Thanks so much for that. So ICICI Securities posted a weak set of numbers, and that was kind of on expected lines as they're losing market share in their active client base for the last 10 months, and also the trading volumes were lower on a year-on-year basis. So on a sequential basis, the revenue was kind of flat at 885 crores. Their PBT and PAT both were down 7%, mainly due to higher operating expenses and high finance costs. When you look at their segmental data, the broking revenue, that was marginally higher by about 4%. This was due to increase in retail derivative volumes. The profitability was, however, down 3%. The issuer services segment, that has dragged down the revenues also. There, the revenues were down 74%, mainly due to decline in primary market activity, and also EBIT was down 90% on a sequential basis. In the near term, given the market volatility, we'll have to watch out for their market share and also how they optimize their cost structure.
Thanks a lot for that, Surbhi. Well, let's hop across to Abhishek. He's joining in to tell us about two stocks. One is Equitas Small Finance Bank, as well as Bank of Maharashtra, looking to raise some money. Morning, Abhishek.
Morning, Nigel. So RBI seems to be happy with small finance banks, given the fact that, yesterday they gave two of them authorized dealership category 1 license or AD1 license. So we had the announcement of AU Small Finance Bank coming in during market hours, and post-market we had it for Equitas Small Finance Bank. So this license allows bank to deal in foreign exchange. So it will allow, bank to serve the needs of importers and exporters. A license will allow bank to provide inward and outward remittance to its customers. The move will put bank almost on par with universal banks, and the step is closer to getting a universal license. I spoke to a few analysts. They say that this move can help in terms of ROA improvement anywhere between 10 to 15 basis points. Unlike AU Small Finance Bank, where the pre-tax ROA, as per analyst estimate, would improve by 35 to 50 basis points. So Bank of Maharashtra, they are considering a board approval for a fundraise for FY24 of about 7,500 crores. So the board meet is on 24th April. If at all they raise about 7,500 crore entirely through the year, based on current numbers, the tier 1 ratio could increase to 20.6% when compared to 13.5% that they had as of Q3. And the leverage and ROE will come down. Leverage is about 18.8 times and ROE is about 24.4%. Back to you.
Okay, thanks a lot for that. Let's also go across to Sonal now. She's tracking some more stocks that are in the news. Sonal, what do you have for us today? Good morning, Sonia. I have 4 stocks on my radar. Let me start with NBCC because the company has been able to secure a work order worth 208 crore rupees. This is from PWD Puducherry. Ultratech Cement, they have commissioned 2.2 million metric tons per annum of brownfield expansion in Patliputra, Bihar. And this increases the capacity to 4.7. And now company's total grey cement manufacturing capacity in India stands at 129.15. HOEC, 2 developments here. The first one is on their B80 field where they will be producing both oil and gas, and it has been under repairs and maintenance for the longest time and has been the big trigger for the company as well. Here the company says that repair and commissioning at their B80 field has been completed. They're currently testing gas production up to 15 million cubic feet per day, and they've also issued a second tender which is for supply of gas at 16% of crude price for previous months. So there are some positive developments here. But on the other hand, in one of their legal cases with respect to the PY3 field, there they have hit a roadblock because the Court of Appeal of Malaysia has dismissed their appeal here. So that could be a negative. Lastly, Ami Organics, they have a board meet on 22nd April to consider issue of equity shares. This is by way of preferential issue. So watching out for all these stocks. Okay, thanks a lot for that. So here's a quick recap of our top stocks with positive news flow. There's Tata Motors, Mastech, Equitas Small Finance Bank, Bank of Maharashtra, NBCC, Ultratech Cement and Ami Organics. While stocks with negative news flow, there's Tata Communications, ICICI Securities and Hindustan Oil Exploration. Let's slip into a quick break. We have so many stocks to ask our next guest. Dipan Mehta of Elixir Equities will be joining in for some fundamental stock analysis. We'll also have Jonathan Barrett of Probus Securities to talk about the rise in metal prices. Do stay tuned in. Welcome back to Bazaar Morning Call. Hope you're having a good morning so far. The bulls definitely are because looks like it's going to be a decent start. 50 points higher on the SGX Nifty. A lot of big cues to track, so let's get straight to it. Dipan Mehta of Elixir Equities is our first guest of the day. Dipan, hi, good morning. I wanted your thoughts first up on Tata Motors because clearly they're going big on their electric vehicle plans, and the stock has had a dream run this year. So far, it's up 20%. Do you see more upsides? And if someone has perhaps missed out on the rally so far, does it make sense to get in afresh?
Good morning, Sonia, and thank you for having me on your show. See, Tata Motors just has this, thing about that from time to time they do surprise us on the upside, and then there are major disappointments as well. Considering that the stock has run up the way it has and the kind of volatility which is there in their earnings, I'd like to stay away. You have to buy Tata Motors and a contract and play when it has corrected by 30-40% from its peak, and that's when you get the highest returns. No doubt, their EV strategy and the positive cash flows, higher sales, especially premium end models, has improved the sentiment in the stock. But it's a very global company, and the kind of global economic headwinds which are there in their key markets, one should be a bit cautious as regards them sustaining the kind of growth rates which they have. So, and keeping in mind the valuations, I prefer that one should look at the domestic auto OEMs rather than a Tata Motors, but there's a trading rally underway and the stock will certainly fly a little higher.
Dipan, hi, good morning. Did you manage to look at the Mastech numbers? And if you did, what did you make of it? Could it be the trigger for some re-rating there?
Good morning, Prashant. I think the first thought which comes to mind, having looked at Mastech, is that we are going to see a lot of divergence in results reported by the IT companies. And small mid-cap companies, I think if they have 2 or 3 good clients which have not cut back on their spending, may be able to maintain their growth rates, at least on the top line front, as we saw with Mastech. Because these small mid-cap companies also have been winning orders over the past 2-3 years or so, some of them big ticket, which may make a difference to their overall performance. When it comes to the Infosys, TCSs, they need like 500 million or those type of 100 to 5 million type of orders or projects for them to sustain growth at that high level of base which they are operating at. And this has been true for last 2-3 years. I think if you go back into the 20-30 year history of software, this is the first time that we have seen that mid-cap companies are A, trading at higher price to earning multiple than large cap, and B, they're reporting significantly higher growth rates quarter on quarter, year on year. No doubt their operating profit margins are lower, but I think size is the benefit at this point of time when it comes to IT stocks. And now I'm keenly looking forward to some of our other favorites like say Tata Elxsi, KPIT, Coforge, Happiest Minds, just to see how they have performed and whether they are seeing severe client cutbacks as we saw in Infosys.
All right. Hi, Dipen. Dipen, what about Concord? You know, everyone was waiting by for privatization, and then that took a bit of a backseat. But the stock has seen a good correction from the top. We have Goldman Sachs have come out with the note, and they're pretty positive on the stock. What's your view?
Good morning, Nigel. You know, many times we have tried to play this privatization theme, whether it is with Concord or earlier with BEML as well, and even IDBI Bank. These things, they come and they go, but end of the day, you know, they are at best trading opportunities. From a fundamental perspective, you know, you need to analyze stocks irrespective of whether they are PSU or whether they are in the private sector. And no doubt logistics is a high growth sector given the kind of, upstick which we are seeing in the economy, as well as EXIM trade as well. And on its own merit, I think Concord may give decent returns. But just because it's going to get privatized on, if you make a bet based on that assumption, then you may be disappointed.
Okay, Dipan, just stay on. I have many more questions for you, but also want to track what's happening in the world of commodities. So let's get straight to it. Manisha Gupta, our commodities editor, is joining in this morning. Brent crude prices are somewhere around $83 a barrel now. So let's find out more. Manisha, hi. What's been happening here?
Morning, Sonia. Well, a couple of things that really seem to be working right now is one, that the U.S. Fed expectation of a 25 basis point rate hike in the month of May, and perhaps one more is what the street is talking about right now. And then you already are looking at ECB expectation that they would hike rates by 3 times in this year. You have similar statements coming in from Bank of England. RBA commentary suggests that the rate hike pause was temporary, and that's what markets are looking at. Of course, China has kept its key lending rate steady for an 8th month in April now, for an 8th month. But looking at that, there are concerns about demand now, and you have seen the crude oil prices lose 2% overnight, and with that, we're trading at a 2-week lows right now. Metals also in a similar trajectory. You have seen copper prices come off with 7-week highs. Aluminum, zinc, nickel, all of that saw a decline anywhere between 0.5% to 2% overnight markets. There are near-term demand concerns, and that's what's weighing onto the prices right now.
Okay, all right. Well, Jonathan Barrett is joining in. Thanks, Manisha, for giving us an update on that. Jonathan Barrett is the CIO at Probus Securities. He's joining in now. Jonathan, welcome to the show. So, you know, as Manisha was talking about, I mean, this the China GDP growth that has come through at about 4.5% has given rise to a lot of expectations of higher demand across the commodity space, across, the world of crude. Do you think it can take crude prices higher, maybe above $85 a barrel as well? On Brent, that is. Your thoughts?
Yeah. No, that's okay. Brent's all right. No problems there at all. Look, I generally think that overall it can, but at the moment the market is focused on increasing interest rates in the States and also that potential for a recession. So I guess when we look at it, it's great to see what China is doing, and the forecasts Q3, Q4 are for prices to move higher for crude. But at the moment, when you actually look at the market and where it is, the market's purely focused on those rate rises in the States, which we're going to get, and the possibility of a recession. Remember, company earnings in the States haven't been that good. We've just had a few, and they've been on the negative side. So as a result of that, we could see some slip up in demand, which will force prices lower.
Hi, Jonathan. Besides crude, let's focus on some of these metal companies. we've got Alcoa's numbers earlier today. They don't give much of an outlook. Earlier, they used to at least give a bit of an outlook, which we could have some read-through out there. There's a sequential improvement out there, and prices have risen quite a bit on a sequential basis. What's your view on some of these commodities, namely aluminium? Do you think it has more legs, and copper as well?
Oh, look, I think it does have more legs. I think when you look at that, those commodities that make up the bulk of the economy and the inputs that are required, you can still see that there's healthy demand for them. I guess just recently we had with Rio Tinto's export numbers out of Australia for iron ore, actually were up 16% from the previous year. So commodities and demand for metals and other commodities is picking up. The question is for really much for how long. When I do look at, say, aluminium and copper, I can see that there is still this tightness in supply, and that tightness in supply is forcing the cash rates higher, but the more longer term they're coming up. So both the markets tend to be in more of a backwardation. I know copper's in a heavy backwardation, and that gives us a sense that we think it'll alleviate down the track. But at the moment, there's tightness around the commodities, which is keeping these prices relatively stable, if not just marginally elevated.
Got that. Jonathan, steel, where do you stand on that? There were some reports that... sorry, go on.
So go ahead.
No, there were some reports which basically suggested, there was Chinese media suggesting that there could be production cuts out of China in H2 of this year, which means lesser steel out of the country, maybe support for prices elsewhere. But I don't know, what's your view?
Oh, look, I generally think if you're talking China, you're talking about an economy that's been stimulated and continues to be stimulated. And the PBOC has continued to say it'll support these industries. We have seen before in the steel production, there are some pollution issues. And every time we see that comes to air, then all of a sudden we see there's a little bit of a bump in terms of pricing. When I think of it, if you still have this massive infrastructure needs, I think comments like that suggesting that they're only really trying to get prices lower because they really actually want to try and buy it cheaper. So it's more persuasion in the market to see steel prices come lower because eventually they actually know that they need it going for the quarter 3, 4 and onwards because they're stimulating that economy. If you stimulate that economy, you need imports. So I think it's more persuasion, trying to get prices lower so that they can then get pricing or get commodity at a good price.
Okay, we will leave it at that. Thanks a lot for joining in and giving us a quick take on the world of crude. But let's get back to the markets now. Homegrown, domestic-focused pharma and consumer health company Mankind Pharma is hitting the markets with a pure offer for sale worth 4,000 crore rupees next week. Rajiv Juneja, who's the Vice Chairman and Managing Director of Mankind Pharma, the company which is the manufacturer of brands such as Manforce, Prega News, Unwanted 72, all of that, talks to CNBC-TV18 about the interest seen in the roadshow to the growth drivers as well as margin pressures that the industry is facing. Listen in, we'll come back.
Traveled 45 days, met every possible big foreign institute, domestic mutual funds, insurance people. So everywhere, they have really, welcomed us very, very warmly, and hope you people will also do the same thing.
In terms of your business, 97% sales come from the domestic market. Exports is just about 3 to 4%. You don't have much of a presence in, a mother market like the US. Is that going to be the growth trajectory going forward, domestic markets and a little presence in in other markets such as the US?
Right from beginning, if you look at Mankind, we have always been very focused company. Always worked on our own strengths rather than on weaknesses. For example, if you go for export and we don't have some entry barrier in our products, some patents, some difficult to make products, some complex product. So for one or 2 years, we can have some profits. That would be all tactical. The philosophy of Mankind is always long term. And that's one reason only 3% export is there. So we don't really see ourselves much in export. We'll always be in India-centric. If you look at Mankind, we are 27 years old company. We launched Delhi in 2004. We launched Mumbai side 20 years back. So we have slowly and gradually evolved. philosophy of Mankind has always been not going and covering the market, going in a market and making a mark is our basically philosophy. So once we go in any place, whether it's a consumer side, look at our consumer division. Manforce condom, number one. Not only number one, it commands 30% market share. Look at Praga News, again number one, pregnancy cards for the ladies. Again, 80% market share, unwanted 72 emergency contraceptive pills. Sure. Again, 60% plus. Thought is always some kind of a leadership should be there.
Just on that point, consumer healthcare is probably another segment which a lot of people are interested in. It's only around 8 to 10% of your total sales. What is the kind of growth trajectory and investments that we can see in that space?
We are binded by this regulatory, so I'll just not go in any kind of speculation. But we see, we have look at the past. We've always grown very good in consumer side, and we hope to do the same in future. Let's hope.
That's an interesting conversation, and we'll play more of it a little later on the program. Deepan is still with us. Deepan, I hope you heard that conversation. So another big pharma company actually coming to the market, the public markets. Would you give it a look? Would you look at it favorably?
Yeah, Prashant, absolutely. I think the best part about Mankind, it is domestic focused. And that's where the value is. I think if you see all the strategies followed by Sun, Dr. Reddy's, Lupin, the larger ones earlier, they went very aggressively in the US generic market and exports. But because of intense competition, they now want to focus on the domestic market. Even Aurobindo is scouting around for acquisitions or trying to grow its domestic market. So I think that's where the real action is, where you have brands, where you have a team of medical representatives, and you create a moat because of the kind of products, the distribution network, and the acceptance by the doctors and the customers. And I think Mankind Pharma is perfect in that sense. It checks all the boxes. The only thing is valuation. As I understand, it's about 30 times or so, which is not that demanding. So eagerly looking forward to the IPO of Mankind and subsequent listing.
Okay. I just had one more question for you, before we take that break. Deepan, the next big set of earnings is expected from ICICI Bank on Saturday. And I was having this chat with Gautam Duggad of Motilal Oswal a couple of days ago, where he said that from the entire banking space, that's the one that they're most bullish on and expecting a very strong set of numbers. Is it a good time to put money to work ahead of the results on Saturday? Your thoughts?
No, Sonia, I think a lot of expectations have built into ICICI Bank, and to an extent it is slightly overowned as well. Our top preference still remains HDFC Bank. I think that they have got better risk-return profile compared to their peer group banks.
Okay, all right. Deepan, request you to stay on with us for a bit. We'll slip into a short break. You come back, we'll get our technical experts here, Nitesh Thakkar as well as Sudarshan Sukhani, who will be joining in to fill us in on how they want to approach markets.
Okay, welcome back. The SGX Nifty is indicating a 40-point higher start, 17,693. It's been that way from the morning. Not really changed. The values have not changed. There's still 13 minutes to go for the pre-open session. Anuj is here in the studios to run us through what he's making of things. Anuj, morning.
Morning, Prashant, Sonia, Nigel. It's a frustrating weekly contract, right? For starters, it's been a full week, and of course, after 2 or 3 truncated weeks. But the highlight of this week has been that it's been in a very tight range. The market's been falling, but not collapsing, and rallies have been sold into. My sense is the trend emerges next week, because next week you react to some really big numbers like ICICI Bank and Reliance. This week, if you look at the numbers, Nifty is down 1%, Bank Nifty is 0.05, Reliance is 0.15. Good thing is, despite the complete collapse of IT, which is the second biggest sector, the market has still managed to hold on to some crucial levels. In terms of levels to watch, Monday's low 17,574 and yesterday's low 17,579. Very close to the current 200-day moving average of 17,587. Sort of gives you a zone where you want to focus on. Coming to today's Nifty outlook, there's clearly a lot of conviction of call writers versus put writers. And my sense is today's trade is about expiry day and levels. I need to see if call writers can defend those levels. What are those levels? Simply, if you go by the options data, somewhere around 17,700, which is where almost every short trader would have put stop losses. On the other side, on the long trader, that stop loss would have been at 17,574, which is a Monday low. So a trader needs to play this range smartly. My sense is this range doesn't break. I mean, if it breaks, then you get a big trade, but it could be 17,574 to 17,700. The other problem for the market has been that the leadership pocket has started to show some tiredness, which is the bank nifty. And it's important to see whether HDFC Bank is bottoming out or not after that result. And ICICI Bank, of course, comes out with numbers on Saturday. So how much of pre-positioning is there over the next couple of days? That's also going to be important.
Okay, thanks a lot, Anuj, for that. Let's get views in from Mitesh Thakkar and Sudarshan Sukhani to find out how to approach the day. Gentlemen, morning to both of you. So as Anuj was saying, on Monday we'll be reacting to a lot of big numbers, ICICI Bank, Reliance Industries. So maybe that's when the next big move could come in. Until then, do you see this as a comatose market, Sudarshan, something where, we're just moving in a very tight range? And what would be the levels to watch?
Yeah, good morning, Sonia. I don't know about the comatose market. It's a very nice word to use for the markets. I'm assuming that the markets are in a very tight trading range. Now, inside this range, there is usually, as I explained, there is no trade. Trades become random, but today may be an exception. For repeatedly, what we are seeing here in the US markets and in India. In the US markets fall invariably every day, and then the dips are bought into. So they eventually cover up all their losses. The same thing is happening in India. 17,600 is a level where the market is buying those dips repeatedly. Now, whether that level holds or not is different. I can't say that. But today, we should be buyers. We should look at the glass as half full and look to go along in the Nifty with a stop just under 17,600. So let's call it 17,570. With that as an initial stop loss, I should be long in the Nifty today.
Okay, Sudarshan, thanks for that. Mitesh, what about you? How are you looking at things?
Morning, Prashant. We've had this view of, pullback and possibly a test of 17,550 zones, which is also the 200 average, the daily averages, and a reversal and reversal point, retracement point. And I think, this is holding out well. So the overall bias remains that we are positive. But in the short term, I think, the markets could have given a pullback, which they have. And unless 17,550 breaks, I think all these declines would be buying opportunities. For me, I expect eventually this range to break on the upside. Though it might last for a few more days because the intraday charts are still not showing any immediate strength. Having said that, I think we have been trading with long buys on stocks, and I think I've got all 4 buy calls. So the idea is to keep buying declines, and as long as 17,550 on a closing basis holds, maintain a long position.
Okay, all right. What about individual stocks, Mitesh?
As I said, I think I have all 4 buy calls today. I have a buy on Axis Bank. Keep a stop at 863 here. Look for targets of 895. Balrampur Chini is a buy. Disclaimer, we have it in our portfolio. So some vested interest, but that's a trading buy with a stop at 412 for targets of 435. Coromandel Fertilizers is a buy with a stop at 932 for targets of 975. And National Aluminum, that's a buy with a stop at 82 for a target of 88.
And Sudarshan, what about you? What would be your ideas for the day?
Well, they're also mostly on the long side. Bharti Airtel is a buying opportunity. It is possible that it may see a rally, which is a tradable rally. Now, also that Bharti Airtel is so much driven by news. So traders should be careful in that. Follow your stop losses, but still give it a chance to go long. Buy with a stop under 756. Jindal Steel had a very big day, wide range day yesterday. It broke out of a fairly decent trading range. It's probably completed its correction. That's a buying opportunity with a stop under 566. Marico, which is my only intraday short, is in a bear market. In this market, I wonder why. Anyway, it's an intraday short with a stop above 472. And finally, BPCL, which was in a 3-week trading range, has broken out of that range on the upside. That's a buy with a stop under 333.
Okay, thanks a lot for that. Well, Mitesh, Sudarshan, will come back to you in a bit. Chandan Taparia is also joining in. He's a derivative and technical analyst at Motilal Oswal Financial Services. Chandan, hi, good morning. What is your marker on the index, both as a floor and the ceiling for the index now? And what are individual stocks that you're looking at today?
Good morning, Sonia. Thanks for having me. So we have seen some decline, but again, we got stuck in a range. India VIX is near to 12 marks. So lower volatility is likely to keep the market in this trading band. On lower side, the key support goes to 17,442. That is a 38.2% retracement of the entire recent swing of 1,000 points. But on upside, we have multiple barrier near to 17,777 to 17,800 zone. So broader range for next couple of days will be 17,442 to 17,777, 17,800. But for immediate point of view, we can put support near to 17,570 to play a bounce towards 17,717 to play this expiry day momentum. Now, if I look at the other data setup, data are mixed, not giving the clue for bigger upside, but at the same time, lower volatility is also supporting the market on the declines as well. Now, talking about Bank Nifty, already we have seen good short covering of open interest shredded by 50% recently. And now I think it is more on the consolidation phase. On Friday, we have ICICI Bank result that will give the fresh trigger. But as of now, till it holds 41,750, we believe the decline could be both for a move towards 42,600 to 42,750 marks. Now, talking about stocks, Nifty Metal Index is comparatively doing well from last few days. The sector has bottomed out. Some short covering is also visible with put writing activity in selective heavyweights name. So here we have positive on the Jindal Steel. This stock is making higher highs, higher lows on the weekly chart, surpass a small trading band by moving beyond this falling supply trend line. Some open interest shaded with put writing indicating some uptick in the counter. Also holding well to its 50-day exponential moving average. So recommending to buy with support of 567, stock can head towards 60511. Second trading idea, that is from the auto, that is buy on TVS Motor. The monthly chart is quite impressive and giving the fresh leg of rally. Technically, that is pole and flag pattern. If I talk about on lower time frame, making higher top, higher bottom. In the last series, we have seen good rollover with long built up. Now open interest is also adding the bullish sentiment in the counter. So recommending to buy with support of 1150. Here we are targeting 1210 on immediate basis. And if someone is looking at the monthly chart, then further 15 to 20% momentum over the next 3-4 months cannot be ruled out.
All right. Thanks very much, Chandan. Good to have you with us here. And good getting those training ideas as well. We'll take a quick commercial break here. There is 5 minutes to go for the pre-open session. We'll be back with Param Desai of Prabhudas Lilladher to discuss expectations from the pharma sector ahead of the fourth quarter earnings, which kick off. Stay tuned. That's coming up.